Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 24th of September, 2020 what? 24. Time's about 6:20 p.m. All right. We had a run in the stock market again. Again, a set of new highs coming in the Dow and some of the S&Ps. And as I said, this market's paying absolutely no attention to the idea of a weak September. So the question is, will the market pay attention that by October 10th, the correction phase is over and you go into typically a year-end rally? Now, that could be thrown off this year because you have something you haven't had in 4 years, and that's the presidential election. I've covered in detail how markets look in front and rear of that in my newsletter. I show traders what the market does right in front of the election, what it does after. But here's what you can count on. After the election, if you go back and you look at how the market's gone in up years for the S&P, they generally just continue on after that. So I think the seasonals are telling you this market's going to go. I think the fundamentals are there. I think the rate cuts are there. And now China joined the party overnight. They cut repo rates. They cut bank reserve requirements. They cut the amount of money for a second home that you have to put down. They claim they're going to lower mortgages very shortly to some number. We don't know what that one is yet. They said they're going to start buying stocks. Yep. So we talked about this was it yesterday? And here it's happening. And the market took off and we went here. Now, sooner or later, you're going to get one of these breaks in the market because nothing grows to the sky. Today I was watching as traders were on CNBC giving their projections, 6,000, 6,250, another projection by the end of the year. So as we're going higher, they're lifting their projections even higher. Interesting what's going on. I think the bonds and notes have broken about all that they have to. I'm starting to watch what the curve yields doing right here, and I suspect that this market is getting to the point in time where it's come down in some of the markets to the 18-day average, and you want to watch that. They're going to start fighting there. The market that has been the strongest is the 2-year, and that makes sense because that's where who is there? You know, Santa Powell. He's there waiting for you, going, ho, 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 Christmas is going to be good. You're looking at the dollar breaking down. You're looking at the eurocurrency up over 122 again today. You can see the market's been up there. It's up 17 tonight. Market that's surprising people is suddenly the Swiss franc has come alive. If you get my special updates, this was one of them this morning I put out to I won't say what, but my traders are smiling right now, I can tell you. Yesterday they weren't. We lost in the meal trade. Not everything is good. Every trader has losses. If you don't believe that, you are in dreamland. Find the guy that doesn't and go with him, all right? You probably make one trade a year, and if it's a great one, you've got the right guy. In the grain markets, well, they're trying to come up here, so we'll see what goes on. Now, before I get into this chart in any way, maybe we should do this and cover what we've got tomorrow. We have the Mortgage Bankers Association, their index for the new home sales is coming out at 9, so we got it 6 and then 9. Now, KB Homes fell after the close. And again, the books of these home builders is not the prettiest thing you could look at. And mortgages have climbed up this week. They were 6.02. The last I looked, they were around 6.20. We have the API stockpile numbers that came out today at 3:30, and they are bullish. You can see they are down in many of the areas. We get at 9:30 in the morning, the EIA. And, of course, we have Fed speakers all the way through, and I cover them every day along with what the curve yield is doing, auction results, and the like in my newsletter. So we'll talk about that if you'd like to get a copy or find out more about it. All right. So when we look at the weekly S&P 500 on a close-only chart, if the market were to close right now, you're up another 1.64%, and that would be another all-time high. You can see how the market has come up here, And now the question is, what kind of pattern is this, all right? For a moment there, I was wondering, are we going to get a slip back here? Because seasonally, you look for that in September. We're not getting any sign of that. And time is running out for that break. So we'll see what happens. So we'll see what goes as the market keeps moving here. You've had a pattern that's pretty clear of higher lows and higher highs. The market is now running into resistance in the air there. Why? Well, if we take a look at the Bollinger Band, it's pretty clear that that's one of the reasons that you're doing it. But you are embedded. Now, what hurts is if you haven't taken my enhanced Bollinger Band course that teaches how to work with this, what the market pattern is, keeps me away from the market temporarily, which I don't like. Obviously, I wish I had gotten into the market back here, but it's not done that for me. In the NASDAQ, are we embedded? So you need both numbers over 90. Over 80 for at least 3 sessions in a row. So you did it on Tuesday. You did it on Monday. Did you do it on Friday? Nope. So tomorrow's very, very important. Now, today was Tuesday. It was not a turnaround Tuesday day. Remember that too, to sign more strength in these markets. In the Dow, you can see the market is it embedding? Again, we don't look at today because we don't know how that's going to finish. Both numbers were over 80 Tuesday. They were over that way on Monday. So was Friday that way? Yep. So you have your embedded reading. And I'll be looking at this market on breaks to potentially be a buyer in it. I can tell you that already. In the Russell, it's like I'm waiting. Every analyst that I'm seeing, Bloomberg and CNBC, small caps. You got to go into the small caps, the rotations there. It's just not happened yet, but it is building something in all this sideways action. If it's a base, you can take this base from roughly 2,100 to 22.5. Flip it over. That'll take you up easily into the 2,400 zone if the market breaks out to the upside. In the 10-year notes, remember what I was saying. I think the markets are trying to come to an end on this break. They're not able to get away on the break from the 18-day average. If the market can get over the 115 level, it negates the downtrend. Bears are still in control of this break at this point. Momentum is down, but keep that in the back of your mind. You're unable in the 5-year note on any of these days to settle under that 18-day average. So while the swing line is down, the bias is up and you've corrected an overbought condition. Plus, if you had an embedded reading, you fell back to the objective and the market is now basing, as I want to call it. In the dollar index, it still looks bearish to me. Lower highs, lower lows. The first objective is now the 103 level on this chart. You are oversold. This is not the place to be going off the daily chart on the short side. Look at your weeklies. Maybe they'll offer you something. The euro's coming right back to the upper Bollinger Band resistance, and it's overbought. So you're oversold dollar, overbought euro. The British pound just moving to the upside here. Now, is it going to embed or not? That'll be the big question. So this market has gone through one of the resistance points at the 132.80 level. It's now in the neighborhood of about 120, 130 points over it. Another count carried us to 136. That's very possible that it goes there, especially if it embeds. So you want to see this? Certainly not in the go short mode. That's how I'd be reading it, not to go short. In the micro Bitcoin, higher lows, higher highs, but I think you got a problem right here. I said this last night. You're at the 100-day average and the upper Bollinger Band, and you're overbought. I'll let somebody else want to own that. We'll be leaving the September shortly, but you wait to the very end. That's when the whole open interest moves in that. In the November Brent, it's probably time that we can look at December now. So I'll finish this, and today I think I'll make the move. But I see a lot of resistance up here. The market got its wish. China's doing something in stimulus. Now the question is, does it transfer into actual consumer demand? If it doesn't, this pop that you're getting is just that. It's a pop that you're getting. The market needs demand. The OPEC put out its long-term objectives today. I wrote about them in my newsletter. I gave what they are. If you don't get it, shame on you. There's a lot of detail in a very condensed period there for you. In gasoline, could the market reach up for the Bollinger Band? It could, but I don't think there's a lot more left in it from that zone right now. And in the heating oil market, you're overbought already. It's going to be harder and harder to get to that band. We'll see if it can do anything. Last, I've been looking for a big rally in nat gas because I think the market will peak in the month of September and start a process possibly of a roll to the downside as we get further along. This is not the time to be short any of the energies. Why? It's a little gale out there in the Caribbean called Tropical Storm Helene. But Helene can become, and is expected to become, a hurricane very quickly by the time we wake up. And if the National Hurricane Service is correct, it'll be a Cat 3 or higher. And that is going to go right into the oil areas, Florida, and it's broad. And it's going to be hitting everything, they say, from Sarasota all the way through the Panhandle, all the way up. So it's going to be a biggie that's supposed to hit. Does anybody know? Well, weathermen, it's hard. But generally, the hurricane guys get it better than most. I will say that. So I want to remind you that if you haven't gotten my newsletter, there's many ways to do it. But it's what I call my complete research. You're going to get videos, written commentaries, trade recommendations, buy here, sell there, do this, do that, along with special reports that I put out. And as I told you, I'm putting out more and more. I fully intend on beginning webinars again shortly. And I'm going to separate ETFs and stocks from futures. I've decided that it doesn't work when you do them all. Too many people want the stocks, and the futures guys don't get a voice in it. So you'll get that. You're going to see the entry, exit, what I do, and I mix daily charts, weekly charts, swing trades with long-term trades. So I do it all there. I cover all these markets for you. And this relates to the SPDR ETF people because so much of what you trade there is based on the futures. You're going to get access to my window envelope numbers so you can put them on charts as I do it. This is going to work on all devices. What do I mean by that? Well, you can work it on your PC or you can work on an Apple product. It works with either one. But what about mobile? Because so many people use tablets and mobile. Yep, we have a load for that. It's called QT Mobile. Be happy to give it to you, to give this a try with it so you can see how it all works out. So how do you get it? It's simple. If you haven't tried it before, you go to iraepstein.com and you'll see the free offers on the top left. If you have the free offer and you say, now it's September, let's go get this, go to iraepstein.com, research it, explains how it all works, inexpensive. You spend more in a week if you go to Starbucks than you will on this for a month, in a week. Got that? What if I tell you in a day for some of you? Yep. So give it a try. I think you might like it. I'm Ira. I'll catch up with you all in the morning. Have a great evening.